All right. Hello, everyone, and welcome to another Pepperstone live event. It's been a pretty big eventful time in markets with huge moves through, of course, NVIDIA and semiconductors, and some large moves starting to appear in currencies and, of course, commodities as well. I hope you're looking forward to it. Today, we're going to cover everything from stocks to currencies to commodities and pretty much even cryptos because there's so much going on. And as always, we want you to ask questions throughout today's session. So make sure to ask as many as you can in the chat and we look forward to talking with you. My name's Thomas Atkinson. As always, I'm joined by Ty and Abella. How have you been this week, Ty? It's not a bad time, yeah?
Good, thank you. Very cold in Victoria right now, but boy, oh boy, the markets are starting to heat up a little bit, Tom. So they're keeping us warm and toasty as we jump into what's going to be an exciting end to the week. We've got I think we've got an octagonal witching hour this week. I think we've got all sorts of stuff going on.
Well,
and non-farm payrolls is approaching us again. So we'll jump straight into the markets and see if we can identify any good trading opportunities.
Yeah, we did see quite a few, trillions of dollars expire last week, and in the OPEX, and that led into some kind of selling around some of the points we spoke about. So actually, when we revisited this, and we do this every week, if you're interested in following, the links in the description for that. Basically, we talked about the 20,000, the psychological level of the Nasdaq, the psychological level of the S&P 500 as it reaches these pivotal points. Not something you see every day, and especially a 10,000 on one of the major indices. And that did cause too much for it. And what we actually saw here was a lot of calls. So basically, a huge amount of options build up momentum that made everyone kind of FOMO into particularly these types of stocks. And then that just dropped out of the markets over the next 3 days. So will we actually see further vol in terms of bear side momentum? Today is going to be very important. And I've actually highlighted here the NASDAQ, I thought, to start off today, Ty, because it's managed to rebound back up, but still dealing in what we would call a supply zone. And of course, resistance support traders would call this part here the resistance. So where we find ourselves at the beginning of this session, coming into the US and obviously mid-session throughout London, is basically right at that pivotal point where bears, if they're going to take control, they really need to do so around here. And I think this gives us a lot to talk about as day traders and scalpers, because when you break down these smaller timeframes, it's very important to start to look for changes and shifts in the market. So what we thought we'd do today is we kind of go through what this market's been doing, which at the moment, over the last couple of sessions, you'll see, generally speaking, it's making a series of higher highs and higher major lows. Now, that's on the 5-minute chart, the 3-minute chart, the 15-minute chart. It's when that starts to significantly change, hey, Ty, like let's say we get underneath something like this, that you want to start saying, well, maybe the bears have been starting to take control of a level such as this.
Yeah, correct. And look, we never want to fight a trend. And when we know that we've got a prevailing trend in that direction, it's always easy to jump into these smaller time frames. I think you're right. You can probably isolate 4 or 5 different time frames on the NAS and find probably 10 or 15 trading opportunities over the last 3 or 4 days. So it's been pretty good. And look, 20,000 is a very, very important level for it. Like we know that. Obviously, it's a psychological level. It did what it needed to do for us. I think we were quite happy to see it, roll over there because that makes technical sense. What we don't want to see is a market that's not behaving itself and that's actually blasting through these levels like it's got no respect. So I think the little box that you've drawn there, really highlights. I mean, you only have to look to the left of the chart as well and identify that box also coincides with a lot of action on the left-hand side as well. So, realistically, I think that, and then when you put your volume profile in, it really exemplifies why that zone is so important. So, look, I don't think we can really highlight enough how important, applying these tools are really to your trading. Like they're at our disposal, basically, in the Trading View platform, and they give us so much insight that was never available to us previously. So, as traders now, we would be, I guess, foolish not to be taking advantage of these tools because they really do open up a very, very broad outlook on what could potentially happen. And more importantly, it's giving us the levels that you've really got to be careful at. And I think highlighting those is it's one of the most important things in trading, understanding where the problems are going to be.
Yeah, so I thought we'd go from the NASDAQ because it's at that supply over to the US 500. And again, we've highlighted some zones here that we're looking at this week. Specifically, I think the 54.50, 54.40 zone. Now, this is the most important level probably for the market. If bears get control of this zone, Ty, it's anchored VWAPs. There are minor levels of support here, minor fibs as well. But more importantly, if we're managing to take this level out, we'll be going to what we call lower low, and we'll be solidifying kind of what we saw with the candles the other day. And let me just show you what I mean by solidifying that. We'll go over here to this chart. This is the S&P 500 from the chart, SPX. So basically the chart during the day of normal trade. And you'll notice that on this Monday event, what we actually saw was we saw a rally into this huge drop, and then it closed right on this low. And Ty, we often talk about the close is the key. And one of the reasons we mention that is because it closes on its low. Yes, it rebounds the next day, which is expected. But if it takes that low again, how significant will that be for the bears? I think there's options levels that really break it down. But on top of that, I think just technically it makes a big difference.
It absolutely does. And if it does do that, I think that it really opens itself up for a move back down to that all-important 52.80 at that point then. And there's not a lot standing between it and 52.80, don't worry. So, yeah, realistically, it's an extraordinarily important zone. Yeah, it's the lightning bolt that we always talk about. And look, while we're on this chart, why not move to the next one, and let's highlight the US 2000, which we always use as a little bit of a guide, because although we've seen a little bit of a bounce back, or you don't want to leave this chart right now, you got more to say about it, we can look at the Russell.
I have one other. I have just two
right.
others. Yeah, I won't leave. He's Ty's right. I wouldn't leave just yet, guys. So with the S&P 500, I think that high. So there's obviously always two ways to look at it, and you're talking about flow. So whenever you're doing price action, if it gets below 54.40, 54.50, this zone, as I agree with Tyrone, I think there's going to be, something we call it like a waterfall or possibly a cascade kind of effect that could come into markets. So it could be a lot of volatility. So worthwhile setting out alerts down here. And if the market is going to continue to remain very bullish, I think a close above that high from Monday's event, that's actually quite significant. So a closer high, I wouldn't be surprised to take out this and maybe even keep going, Ty. I mean, the market has been quite resilient. Anyway, we'll go over to the US 2000 before we do the Dow, because all of these are important. Then we'll go into some of the other charts. But we'll look at the US 2000. Yep. This market, of course, staying sideways thanks to regional banks in particular.
Yep. Now, look, we'll actually draw, I'll get you to draw the descending channel that we've got there, Tom, just so our audience can see exactly what we're talking about. But we've got a very strong descending channel and very, very, very little white space inside this channel. You can see that the levels are very, very busy, and that's telling us that we've got a lot of price action moving in and out of this channel. The last move you can see, look, is if we go to a daily, I mean, we'll go back to a daily for 1 second, and you'll be able to see that the 20 moving average has held it up, as has the 50 moving average. You've got a 20 and a 50 right there at that resistance, and it has failed to actually get to the top of the channel again this time. So whilst the US 500 and the NASDAQ have actually started to rally a little bit, this one has actually failed to join the party. And you know what I feel about this one? It has not let us down in a long time as a bit of a I guess what do you call those orbs that you can see, the looking glass to see into the future? What do you call that, Tom?
I think they're Palantir in Lord of the Rings, but I can't remember.
one of those
figures. Yeah.
Yeah. Look, in other words, it does predict a little bit. It has been able to predict the moves if this doesn't follow the other two major indices. So something to keep in mind, that we have got pretty strong resistance, and there's no question we are in a dead set downtrend here. We have got lower high and lower lows basically since the start of May, and it's formed a very nice channel. You can do it two ways, actually. You can join the wicks like Tom has done there, with the channel, or you can actually even draw it onto the bodies. And for me, when you can do both and it's still a very clear channel, that channel is actually even more significant. Okay, so when you can actually do a body line descending channels or whatever pattern it is, and you can also join wicks and you still see the same pattern, that makes it even more significant. As you can see, there's not a lot of we call it white space on the charts. There's not a lot of white space there. In Tom's charts, it's a black space because Tom likes the black charts. My charts are completely opposite. The one thing that Tom and I do very, very differently is the color of our charts. So I call it white space. Tom would call it black space, but there's very little of it. And that's what's significant. The price action is very, very full inside this pattern, okay? And we've got resistance right in front of us. So it's something to keep in mind when we're looking at the S&P 500 and the NAS and, of course, the Dow.
Actually, I've got a question. Might as well ask everybody. What color charts do you actually run? Do you run white charts? Do you run black charts? Do you run something else in one of the other platforms that Pepperstone offers? I'd be interested actually to see what people are using right now. So let us know. All right, let's just quickly switch to US 30 just because I think the Dow did something very different. It rallied through that kind of weakness that we saw on Monday. So a complete switch. And what that's telling us is it was less semiconductors and more the rest of the market because the Dow does have quite a few older companies in it, the old economies, they call it. And it actually rallied through. And I think things like some of the energy sectors and stuff are starting to improve. So it's back at the first level of support. The second level is sitting around 38.8. So two interesting zones on the Dow. I think some interesting trading in the indices in general. So we'll come back in just a moment. We'll have a look at the US dollar. We'll look at gold and, of course, the rest of the commodities. We've got a quick risk warning before that moment. Okay, well, let's have a look firstly at, I think we'll go with copper, tie, and just the metals here. I just want to kind of mention the metals because I do think that sometimes they call it Dr. Copper and it is an important metal. Maybe you don't need to trade it, but you do definitely want to be looking at it. It's falling lower. So we've discussed this a few times on the stream over the last couple of months. And we've talked about the 450 level being pivotal. And we've talked about this 20 moving average, Tyron's favorite indicator on the charts. Actually, in this case, very good resistance and dynamic support for this market. You can see how it's respected it. Now, why this is important is I think it looks like copper's actually going to fall further, Ty, and I think you'll agree with me. And I'm looking at a reaction somewhere around 425. And this is boding, I think, poorly for quite a few things, mostly metals. I think metals could have a little bit more weakness here. And possibly it even means that the US dollar might see continued strength, which we'll go through in a moment. And I could see it kind of doing this and then the 20 moving average coming down and then it breaching the 20 moving average at some point and changing trend to the upside. So I think there's some very exciting stuff going on in metals. Is there anything else that you want to break down here? I mean, this to me is a chart where you've got to be patient. You've got to look at the higher time frames, look at the weeklies. They keep rejecting. It's coming down. I wouldn't be surprised at all to see it at 425. 61.8 fib. Anything you've got to add to that one?
Oh, I think it's just important that you don't have to actually trade copper, but I think it's really important to have it on your charts and just look at it a little bit like, look, there are some things that are a must have on your on your little index, on the side little index. I call it an index because I'm old school, but things like the VIX, copper. I think the dollar index, I think they're, even if you don't trade them directly, I think they're very, very important things to have as part of your overall viewing. You have to look at them every single day, but I think it's important to look at them at least once a week because they can give you very good broad clues on what the whole market is doing, especially in different sectors. Now, dollar index is, well, we'll touch on it now while we're here. It's happy days here. Like we are moving on to the new high. It's done exactly what we needed it to do. We talked about this last week, and hopefully you're able to take advantage of some of that because I think we got some really good setups last week. Tom, we were talking about the euro short, which played out really nicely. It broke down past the 107. Finally, it was a bit of a stronghold of 107. Dollar index is obviously its inverse, but yeah, to me, I look at the dollar index and I think to myself, it looks like it wants to go higher. Realistically, it's about to bust to a new high, and if it does that, I think it really opened itself up to about maybe 106.50 at the previous high, and I think there's a reasonable chance of that happening. And like we talked about the euro, if it falls past this 107, it is a little bit of a free fall down to that sort of, probably low 106 to 105.50.
Yeah, I would think that this first level makes some sense at 106.6 to find some buyers, but as soon as that level gets taken out, I wouldn't be surprised at all to go all the way down to the 106.20s, and then underneath that, of course, the 105s as you mentioned then. Now, this is the thing with the dollar index. I've got it on the left-hand side and, of course, on the right-hand side, the euro. Many people use the euro as a proxy to trade the US dollar. But notice again, the weekly is superior here.
Yeah.
So we were looking for further weakness underneath to under 104 a few weeks ago. We discussed how we thought this was a major level. We then talked about this candle here being significant, and of course, then we continued to see this weekly strong buying wicks, which basically are telling us that for now the US dollar wants to go up. And what that I think is telling me in some ways, Ty, is maybe we've got a reinflation trade going on. We just saw the Australian uh, CPI come out basically, and it was hot. I think the CAD one was relatively hot. Obviously, everyone's saying inflation has been killed throughout many places. I'm not sure it has been in the US. Maybe we're not as restrictive as we need to be yet. So, what the US dollar is front running that, I think, and kind of doing what lots of people are not thinking.
Yeah,
Regardless,
absolutely.
traders like you and I and all of you guys out there, we don't really need to care about that. That's the beauty of price action. It's doing it anyway. So that's why we don't need to fall into the narratives. The narratives won't help you. The price action generally will. So
Mm.
as we scroll down through the time frames, you'll see here we're making a series of higher highs and higher lows. We could get getting a very pivotal closure here today. And that closure is going to, I think, price in, a 106. So pretty much if the dollar index closes bullish here, euro falls a little bit lower and maybe closes around even if it doesn't get below 106.65, Ty. Yeah, you're right. I would see 40, 50 points
Mm.
fairly quickly on these currencies.
Yeah, I think we've got to be mindful, and it was well documented that the Reserve Bank in Australia was within a hair's breadth of raising rates a couple of Tuesdays ago. Like they were dead set about to do it. So our inflation problem is not fixed in this country, I can tell you that. And there is a very high possibility that there's going to be an interest rate rise shortly here. So as much as it has been curbed in other parts of the world. I think some of the Western countries, Tom, are still fighting the possibility that reinflation is a thing, and I think we've got to be very mindful of that. And look, those dollar index weekly candles, I love that. I just think that it tells you so much about what you need to know about what the market's doing. Candles tell us everything we need to know. Price action and those rejections are just magic. Like
Yeah,
it's
so
very rare to get a better signal than three big wick candles in a row where prices tested the lows and completely rebounded and pushed up higher and higher. So we've been relatively bullish on the dollar index. Look, for the people who have been following us for the last few months through these webinars, we knew that the 104 was an extraordinarily strong level, and we've been relatively bullish on it. So this is not a surprise to us, but it's also good to see it play out so we can show you what these candles really mean, so you can take advantage of them when you see them, because they are very, very bullish signs.
all right, well, let's go to the chat here. And a few of you mentioning that you're using black charts, a few people using both. Most people that are printing, Ty, they're using white charts, cost effective. So good work there. And also good to get these questions coming in. We will answer the US dollar yen one in just a few moments. And David says here, is copper telling us, what's copper telling us about China? Well, I don't necessarily think it's obviously China's been stockpiling copper. If you look at macro charts, you'll see that they've been stockpiling a lot of copper, stockpiling a hell of a lot of iron ore as well. So that's probably starting to affect those markets a little bit. But realistically, I think just it's the standard price action that you would expect. We already knew this, so that might be the narrative. But what actually happened is we got a huge run on copper, a huge run on metals. They had to come back. So I think that probably leads us into gold. Let's have a look at gold here, because it's the same thing. Very bullish on gold over the medium, longer term. At least I am. I've talked about it quite a few times. All the way from back in the 1800s and 1700s. I do still think the gold can possibly get to 3K an ounce, Ty. It's a relatively large call, but I think it makes some sense based on central bank buying. However, that doesn't change the current price action. And again, I'm using the weekly chart here together to show you guys why it's so important you look at weeklies. This is not the chart that I would usually be buying. I mean, you've got a rejection wick, a rejection wick, a rejection wick. Now, if you close above those wicks, is that smiley face towards gold? I would say, yeah, it's a lot better in terms of the way it would be looking on chart. But right now, all this is telling me is be cautious, possibly even be looking to the weakness side, because it isn't rallying the way that you would want it to in terms of real strength. And you can see that by a high, a low, a lower high, a lower low, a lower high currently, lower low, we don't know. But if it does fall through this level tie, I think it's going to be short and sharp and swift because, of course, a closure underneath here that isn't instantly rejected, that's opening up the chance of something we've talked about for quite some time, which is down here.
2280 to 2180 would be a very likely scenario if we get a break down past that 2280, no question. I'm very comfortable with that. So the patterns are telling us that's potentially what's going to happen. Look, the daily is a very congested, chart really at the moment. It's hovering, well, it's broken past the 20 and the 50 now, but it has been playing inside that little range for quite some time, and it's looking like it wants to go weak in our time. So I think I'll be watching this with great interest tonight because we could be at 2280 in a heartbeat, and if it does and we get a daily close below there, I think that gold's going to be in a little bit of trouble short term.
Question coming in here, or two questions, one about silver, one about gold. Would dollar strength and gold weakness be related to people now not expecting interest rate cuts? I don't think so, because look, gold is a weird one. It's actually the oldest currency in the world. So if you think of it that way, so realistically, it should actually like interest rate cuts. Now, it has been going up into hikes as well. So this is actually disconnected from that kind of narrative. I think what's happening here is we've got the chance of monetary policy. We've also got the chance of central banks purchasing it. And also gold has had what we call a lost decade. So if you look at gold's history, it really hasn't done much since 2011, even here. It's only done a little bit now. Yes, it's been doing great over 2024 and back into 23, but not over history. So I think gold is having its kind of time in the sun, which did happen before during an inflationary period. So gold could be just repricing back to comparative terms with the dollar. And I think of it that way. The next question is from Gray saying, what do you think about silver? And does that mean I should start selling rather than dip buying? Well, I mean, this basically depends on what your process is. I mean, do you want to be selling? Do you see strong enough signals? Not all the time does a technical analyst have edge on charts. You might say, so Tyron and I might be talking about gold there. We might say, look, if gold takes that low and closes, we could potentially start to scale in shorts because we think that would be significant. Or we could say, well, we don't really feel like taking that trade because the risk reward to where we have to place our stop would not make sense. So instead, what we're going to do is wait for the next level, which is that 2170, 2190 kind of zone. If that did happen, then we'd be looking to a dip buy. It really comes back to risk reward. Sometimes Tyron and I have a very good inkling to a move and what a market might do, but that doesn't mean that it's worthwhile us taking that trade. Even if we might think, okay, we've got 70%, 80% edge here for that move, it still doesn't make sense from a risk reward ratio. So that becomes very important, doesn't it, Ty? That it's the battles that you want to fight. And look, this chart looks bad, of course, but that doesn't mean that I want to short it.
Yeah. And I tell you what, the one thing about silver is you'd have to say it does find itself at an extraordinarily important zone in terms of role reversal. That sort of $28.80 to $29 mark is very, very strong. If you take it out on a daily, you can see that you've got a very, very heavy level of resistance just there on the left of the chart. So you'd want to be, like I say, it's a line in the sand a little bit. To me, Tom, this looks like the same level. It's got an inkling of the same level as the 2280 on gold right now. If that level breaks, I just feel that the 2280 on gold will break as well. And the fall, I think the fall could go all the way to 26 actually, because that's actually the next spot. It's a decent chance that it's going to get that low. So
I would probably bet about 26.50 on gold, something silver. I mean, but I go back to the weekly, Ty, and I say this again: is that the chart that you like? Every rally has been snuffed. So basically, it goes up. Oh no, sorry. Oh, it goes up. Oh, we're going to sell that. Goes up. We're going to sell it. Goes up. We're going to sell that. So
effectively the opposite of the dollar index. Yeah, complete opposite of the dollar index.
Yeah, exactly. And that's the thing. If the US dollar is breaking out, then that will put pressure on these metals. And again, we've got copper weakening. I'm don't get me wrong. I am bullish on gold but it's different to be bullish from a position that you're looking at months and years versus just a few weeks. And that's very important to set delineation from a trading perspective, because right now, I don't think that's a great level. I mean, frankly, based on this price action here. And I would be looking for more evidence. And I think that's one of the things we love to do in this show is we like to talk about this because we've said this for a few weeks now. We've talked about gold not really being at an extreme zone. You might say, well, I could have bought and sold and bought and sold and bought and sold in between. Yeah, you could have, but how many edges did you have there? You must find the edge. All right, let's answer the next question, Ty, and move over to US dollar yen. Now, this is one that you brought up, I think, a little while ago, and we were talking about basically with the yen once we get this thing up.
I think it was our trade of the week last week, Tom.
Oh, what happened there? It just disappeared on me. It doesn't want me to show the yen.
It's moving too fast.
It's moving too fast. It's too furious. All right. So this was the one that we were talking about. And you can see the analysis we had up last week, which was a series of higher lows. This nice kind of bullish hammer that came off here. And then we went into the daily and you were talking about it breaching through this area and then continuing up. And basically this is just more Bank of Japan action going on. As always, I think the thing with the yen is you've got to be careful for this type of thing, intervention stuff that's causing massive volatility. So I always put a caveat on all yen trades. You've got to be careful. But if you're looking at this this trend, what's your opinion, Ty? This was your one from last week. So what's your opinion on it now?
Yeah, look, it did exactly what we needed it to do. It was a build-up of pressure. You could see that the highs were getting equal at the resistance, and the lows were getting higher and higher. And all we were waiting for was that break. And once it did, yeah, off it went. I think it was a very easy trade. I think it was a very easy couple of hundred pips, actually. Look, it's at the absolute level of resistance now where the previous wick sold off. I think it's a very telling level right here at the 160. I think that a break above there would make me nervous. I'm not going to lie. I don't think I'd be jumping in on along from here. I think I'd be much more comfortable if it broke through and came back and tested that level from above to find support there like it has done previously. I think the trade's already done here, Tom. I'm a little bit nervous at this level.
Yeah, I agree. I think the problem is that you can. I was just kind of pointing out this while you're talking about it. So that was that previous high. Obviously, we didn't retest it, but came over here, weakened off, then came to the same point. This time accumulated, went up, and you can see the roll reversal. I feel like the issue is that Bank of Japan, obviously, well, they're in an interesting situation, and that from the macro perspective, at least their policy perspective, it's doing what it's doing, and probably a lot of people thought around, I think it was 158, 160 was estimated to be a very big pivotal point for their discussion points of what they were going to do about it. So I'm not here to say that I know exactly what they're going to do to the currency, but what I would say is I would be ultra cautious at these levels because whenever it goes to a new high, it gets volatile.
Yeah, very volatile. And I think it's been a very technically sound trade for a long time, but it's technically sound when it's got barriers to aim for. I think when it's in uncharted territory, it can be very, very volatile. So you want to be really careful.
Yeah. And I think we just go back to what happened in 22. We go back to obviously this November period and just recently in April where it had a bit of a tantrum and fell. And that's nothing to sneeze at. Like, I mean, it went from 160 all the way down to 151. That's 5.45%, which is a lot in currency world. And they did that in just a few sessions. So you've just got to be careful here. All right, let's move over to the next one, which I think has got to be oil, Ty, just because oil has been, we discussed this quite a lot last week. And we just talked about the idea that we were still feeling bullish on oil. So this is obviously the day we talked about it. It's still trading at the same zone. It's been accumulating. It could be distribution, but it looks like accumulation at this point. And I think oil is still trying to set up towards that 84 to 84.50 a barrel. Let's actually have a look at the smaller timeframes because, daily and weekly is cool, but let's have a look at the smaller timeframes and see how it's been going. So at the moment, it's still holding above here, which I think is quite pivotal because I feel like if it loses this 80 to 79.80 a barrel, at that point, it could come all the way back down to that previous accumulation. Maybe it finds a buyer there. At the moment, it looks like it's just consolidating and possibly a breakout might be significant. What do you think about 82 plus closure?
I think an A2 plus closure really leads into an $84.50 to $85 mark pretty quickly.
Yep.
I think it just wants to break that zone, and it has been, very, very technical. Most recently, like we've been talking about it to death, but and that's for a reason because it's very easily traded at the moment. Sideways, no question at the moment, but I don't think that's a bad thing for oil. I think that really the longer it stays up here and the closer it peppers that $82 mark, I think the probably more likely it is that it's going to break up.
Yeah, I feel like at the moment it just looks like the longer it holds, the more it breaks. As we know, the
Mm,
longer something coils,
mm.
the harder the
The
break tends to be.
bigger
Now,
reaction. Yeah.
yes, yeah. Now, speaking of coiling, we do have, of course, a stock that we've been following for a while now, which is Tesla. Now, I wouldn't say it's been a hard
Mm.
break, though it did get very ferocious in the first session. But Tesla, to me, still looks like it's trying to push that 198, 200 barrier tie. This has been a very interesting trade because of, again, guess it, the weekly moving, the weekly candle. So you can see here, I think a lot of people got chopped up here between these long leg dojis. Indecision, 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 big indecision. But this one was very telling. The price action underneath to me showed all of those signs of finding a bull. And actually, it's been pretty good on percentages. So what we saw is we saw the market kind of go off in one direction, negative, then push a bullish narrative with this big engulfing candle. And to me, I was incredibly bullish here. And then it came out with a massive move, and I was like, "Wow, this thing is really ferocious." And then, of course, it filled gap, giving a secondary entry, which we discussed as well. And then now it seems to be trying to find that momentum. And I feel like if it's able to get back above these highs here, Ty, it could be on its way to that 200. And I think it's kind of like the anti-market at some point at now because it's been behind for so long. So, what are your thoughts here? I think it's been interesting, pretty good price action. Certainly, a couple of good entry points from the risk reward side.
Yep. I think it's building, and I agree. I mean, I'm not even sure 200's actually. I think 200's the first target, but I think
Yeah.
it's if it gets to 200, I think 210 is probably going to get there
Mm.
very, very quickly as well. I think it's got good upside. It's just
Mhm.
one of those ones. It needs to break above it, and it promises so much, and sometimes
Mm.
delivers so little. Tesla, like you got to be. It's one of those ones where you need to set an alarm, and the problem with it, of course, is that you wake up the next day, it'll be like 205, and you've missed the whole run. That's the problem with it. It
Yeah.
can be
It's fast.
that volatile, unfortunately, but it
Yeah.
looks to me that it's building. And yeah, while it's trading above the 20 moving average, and yeah, realistically, trying to get above the 190,
Yeah. And look how significant,
trying
speaking
very
of
hard.
20s, what if a weekly close is above this 20?
Oh,
Like,
look
that's the
out.
first weekly
Yeah,
close since over
that'll be
here, which
that
actually
will be a
led
big
to
deal.
quite a large percentage. So
Yeah.
I have a feeling that Tesla's trying to do something fairly significant um, from the price action side. And I think this is another, why I really want to bring this up, Ty, and talk with all of you guys about it is because it's a narrative thing. The narrative is terrible for this company right
Mm.
now. I mean, you couldn't put more negativity on it other than over here. But as soon as it hit that mass negativity, it flipped around. And I liken this to what we found out about Meta or Facebook. So if you think about it, and I'll actually load Meta just so you guys can see this, because this is why it's so important to be a price action based trader and not fall too much into the narrative. Down here, everyone thought the company was gone. And I remember because it was that earnings, it dropped, and then all of a sudden it V rallied up. And look at it since then. I mean, it's just been absolutely flying. And what they did down here is, of course, they sacked staff, refinanced. Look at those big trading days. A lot of people got liquidated down here, and then it went off in the opposite direction. And this was before any good news came out about the company. It was actually the worst news you could see. One of the worst earnings. Everything was bad, but the market had just smashed it so much that became a pivotal turning point. So I think that's why in price action, if you actually break it down smaller time frames, you'll notice there are some bullish signs there. I mean, I feel like Tesla's suffering one of those fates as well, with everyone looking at not so much their AI stuff and everyone looking, of course, more at the car stuff, which you could say is rightfully so. All right, let's move over to the big one, Ty, which is Nvidia. Of course, everyone wants to know about Nvidia. Huge rally on it in recent times. I actually wanted to show a higher time frame here just for interest, because what's happened is Nvidia's gone on this kind of like epic trendline run, which you'll notice is like here, and then it's consolidated, and then it went on another epic trendline run, which you'll notice are very similar legs. And I think this might be the third time it's done such a big move. yeah, this one's not as big. But this is the first. This is a huge one. This is very close to being exactly where you would expect. And usually that means that the pullbacks can be relatively similar, hey Ty. So it's interesting to note that actually pushes us to where we got last or this week. Now, I'm not sure if this is the low for Nvidia yet, but I can certainly see why people bounced it. And 120 is a huge zone for this Friday's options expiration. So I thought I'd put that in there as well, along with the technicals. But what I was doing there is I was just showing this is kind of like an Elliott wave theory, actually, but we like to think of it as markets sometimes will move in synergistic ways, don't they, Ty? So they kind of go up in the same kind of distance.
Yeah, and it's done that very, very well. I mean, really, it's hard to, and it's always that's something to keep in mind when you are trying to look for a predictive move into uncharted territory. Like the market does often move in waves that are very equal. So if you are uncertain about where the next move could end, if it's in an uncharted territory, often the previous wave is a really, really good guide.
Now, the reason I wanted to bring this chart up is I think that it's shown us something significant. Similar to over here on this left-hand side, I feel like maybe the NVIDIA lost a little bit too much too quickly after its stock split. So obviously stock split comes here, goes up pretty heavily. Now, stock splits notoriously have been very good for the market, but not straight after the split itself. So it's given up some of that. And I could see this thing kind of maybe making it back up to here, the 61.8 fib, and consolidating for some while. It's had a great run. It's probably due a little bit of a rest. There are seasonal reasons for this as well, Ty, which basically semiconductors tend to do a little bit weaker around this period of time. And the one that I want to really highlight to you guys was looking at a combo we've mentioned before, which I kind of feel like is the most important combo for the markets out there. And that's semiconductors versus the SPY. And you'll notice it came back to the daily 20 moving average. But recently, it's been loving the weekly one, the mean reversion. And I mean loving it. Like, here's the weakness that we saw through 22. Here's the strength that comes off the 20. You can see how good this level's been. And we haven't come back to that during this pullback. So if this is a significant pullback, to me, Ty, it could be this.
Yeah. And that would be, if it happened quick enough too, that would be a pretty reasonable roll reversal zone too from the previous resistance at, around sort of April-ish this year. So, no, very, very interesting. How I feel about 20 moving averages.
Mm. Especially in these stocks and these combos.
Yeah.
And this is possibly the most important combo in the market for the next 1 to 2 years as we go into the AI phase of, I'm pretty sure there'll be IPOs and everything. But, here we've got this very important 0.45 ratio. So I really encourage people that are using the TradingView platform and Pepperstone to start to think about some of these combos and pop them on, because they can be very interesting, very cool to put on the charts. All right. Well, it's that time of the day again, Ty, where we ask all of you guys what questions you'd like to ask. So if there's a chart you want to have a look at, or is there a question you want to ask us about the market, please definitely do so. If you want to continue to see these types of sessions, we do them every Wednesday. Look at the links in the description so that you can sign up and get alerted to those. And of course, give it a big thumbs up if you enjoy this content that we produce as well on the Pepperstone platform. Let Pepperstone know that you enjoy it, and we can keep doing it. Now, from the trade of the week, Ty, did you have one that you want to mention straight away?
It's actually the Russell. We've already covered it, really. I just didn't say it was the trade of the week. I think the short on the Russell back to the bottom of the channel, I believe in the resistance, and I think that the channel has proven to be very, very strong. And I think that potential move down below 2,000 is imminent. That's my thoughts on the Russell, and I think that will be a significant factor in potentially bringing a bit of weakness to the NAS and also the S&P 500. So that is my focus. But, I've got a question actually for Michelle and Frasato. Where is it nice and sunny? Because I tell you what, Tom and I are wearing jumpers and puffer jackets here. So where are you residing that you've got nice warm sun and it's morning? I'd like to know.
While we wait for that, I'll quickly go through what I think is probably the best one. I'd probably go with the oil just because I think that
in
is
the
in the
UK, okay.
accumulation. The UK, yeah. So they're in their they're in their nice summertime versus no, I'm not sure what is the UK summertime.
Warm and sunny,
Someone said
warm
the
and
other
sunny
day
in
that
the
that
UK.
was good, a lovely day, and it was 15 degrees. So
I went to
was
the UK in the middle of summer, and it was the coldest part of our holiday last year. I was away for 6 weeks in Europe, and
warmth is
I was in
relative.
the
That's
UK. I
right,
was
David.
in London for 4 days, and it rained every day.
Yeah. The Cotswolds, very
Yeah.
nice. All right, so let's.
Bitcoin for Kelvin, no problem.
Oh
Let's
yes, yeah,
go to
we need to do
Bitcoin.
Bitcoin. We'll do that in a moment. So US oil for me probably tied through 82, looking for 84. I feel like that could be accumulation, and I'm just looking for that last catalyst. All right, let's go over to Bitcoin. We've got it. Don't worry, I've got it all prepped for you there, Calvin. And yeah, this one I've been doing a lot of thinking about. So I actually had this first major support put on the chart, and it actually hit it perfect and just found the instant buyer. There's a lot at stake for Bitcoin. I've really been thinking about this chart, Ty, and we've got a lower high over here. So here's a high, here's a low, here's a lower high. So a lower low would actually be quite significant from, of course, your lightning bolt concept. And I would think it wouldn't be very good for the market to see something like that. It opens up the possibility of 51.8. It opens up the possibility of 40. But this is a very important level for it to hold up. And also, you'll notice here, again, I'm using the weekly. I'm using a weekly a lot at the moment. A lot of weekly hits. The 20 moving average around there has also been quite well respected on this pair for quite some time. So to me, it kind of feels like there's a lot at stake for the weekly close. That's what I'm looking for. Let's have a go down to the smaller time frames. So we'll break down daily. And not too much on the daily, I feel. I think you agree with that. And we break down the 2 hour. Now, the first okay sign, okay, it's not that good, but it's okay sign is that we took that high. So to me, like that is the first, all right, well, we're trying on the smaller time frames to find some kind of buyer. I could see it pulling back, maybe 60,000, somewhere in there. I'd like to see some structure form. And if it finds a buyer kind of in that area, maybe a day trader might come in and say stops below here or here, and I'll have a go at it. It is more of a buy the dip at the moment, more than I think really great structure. Yeah, it's more of a positional or an investor's buying area. I wouldn't say it's a incredible risk reward ratio trade at this point.
I find it hard to get excited about it at this stage. I think if it starts to roll over and breaks to a new low below 58,000, then I'll start to get a bit excited.
Wow, if you want to short it, yeah. Yeah. So if you're looking at the buy end, you really need it to hold above 58.
Yeah.
It hasn't got any change of significant areas. I've still got the bull swing zone. We talked about this a lot. I was obviously doing heaps of analysis on it as it was making a series of lower lows and lower highs. It never made a higher high. It never changed trend. It never did anything good for swing. So, basically this has been short the whole time. And I know a lot of you guys look for it on the upside, but I think 58 is a very important zone. A close below that, I wouldn't be surprised at all to come back to the 51.8 area.
No, I agree. No, I think it's a good one. Just out of curiosity, team, if Tom and I came to the UK and did like a couple of presentations, would you come and join us, or would you just hate on us? I'd be interested to know.
I'm sure a lot of people would come and join.
Would you come and join us? I would, because we've already done the Vegas, and we're looking at going to the US again shortly. But yeah, we both dearly love Europe and the UK, and we'd love to actually get out there and do a few presentations. So maybe not only would you like to join us, but what cities would you recommend that we actually do? Would it be London proper, or are there other cities? Because we probably want to do a few. That's all. And we're just interested, because we're always looking for information on where we can feel most welcome, Tom. So
I think. Well, it'd be nice to revisit the UK. It's been a while since I've been there. Anyway, let us know in the comment section down below if you're watching this in replay or, of course, live, and we'll check it out. It'd be awesome. All right, I think London would probably be the one for most people, Ty. Just, you can get there at least on the trains and the cars. Well, the cars you might not want to get in there. It's pretty expensive in the tolls. But anyway, very good, guys. Thank you so much for watching. As always, we do this every Wednesday. We'll see you back here next Wednesday. For the news for the week ahead, watch the core PCE. That's on Friday, for the New York market. That is going to be the one that probably is the biggest bit of news. And I think we'll start implementing that in the show as well. At the end of each session, what we'll do is we'll tell you what's upcoming that you really need to be watching. This week is going to be the core PCE. It's the lead thing that the Federal Reserve uses towards whether they think they've beaten inflation or not. So the market will be looking towards that. And of course, what do you usually want to be watching usually during core PCE? Well, you want to be watching yields, which you can do in the Pepperstone connected to TradingView platform by typing in US02Y and US10Y. And you'll be able to look at the two main yields that most people watch. If that goes up, of course, that usually will mean dollars kind of going bullish, and oil might be going up as well. And yeah, it'll have an impact. That's probably the only bit of news I think that's super important, though, Ty, at the moment. And then, as you mentioned, non-farm payrolls comes the week after, which should get the currencies going again.
Brilliant. Team, thank you so much for joining us tonight. We do appreciate you giving up your time to listen to us analyze the markets. Please give your feedback to Pepperstone in terms of what you want to see, and make sure you join us here next Wednesday at the same time to look at the markets and see what it's going to give us.
Awesome. Thank you so much, guys. Thank you for joining us. We'll see you next week, same time, same place. We'll leave you with the outro. Bye for now.